welcome. You're watching Business Today Television. This is Market Today. I'm Sakshi Batra and with me is Shail Bhatnagar. And the outset, let me also wish all of our viewers a very happy International Yoga Day to all of you. And Prime Minister Modi is in Srinagar addressing the audiences on this International Yoga Day. And he has said that as we are marking this 10th International Yoga Day, he's urging everyone to make yoga a part of their lives as well. Now, as far as the markets are concerned, remember yesterday was a day where the Nifty just traded in a 170-point band on the weekly options expiry session. It managed to hang on to the gains on the Thursday. The index heavyweights definitely lent support and aided the recovery from lower levels in the early morning session. So Reliance Industries, HDFC, ICICI, they together contributed about 62 odd points to the Nifty gains as well. The Nifty Bank therefore rallied about 400 points on Thursday, tracking positive cues from across the banking counters, especially the private banks as well. But across the board, in the broader markets, we did see fertilizers and the chemical stakes that were hogging all the limelight in yesterday's trading session. The question is, will the Nifty extend the winning run to third straight week as of today amidst mixed global cues and renewed buying by the FIIs? Good morning to viewers and good morning, Shail.
Good morning, ladies and gentlemen, and a very warm welcome to you all on this lovely and genuinely very nice weather in Delhi, thanks to Sakshi's efforts to bring down some cool temperature from Maharashtra this week. And as she has wished you the best for Antarashtriya Yog Divas, something from my side also. Please, even once a week, include yoga in your life. The amount of peace, calmness and health that will descend on you will be phenomenal. With that, ladies and gentlemen, thank God it's Friday. It's the last working day of the week. But as Sakshi and I were talking to each other before this show started, next week onwards, we'll be meeting you more often during the day. And that is something that our team and us both look forward to. Nevertheless, let's start as we always do with the daily chart of the Nifty. That's right in front of you. Remember, for the last two sessions, Thursday, which was yesterday, and the weekly expiry, and even a day before, there's a bit of a consolidation move that's happening on the Nifty, and why not? We've dramatically changed the position of the Nifty in the previous week when it added 720 points, then it added another 193, and now it's quiet. Even at this level, it's up 100%, 100 points over the last 3-4 trading sessions, and of course we'll be closing with weekly gains, which will be fourth in a row. But trade is expected to be quiet today. You'll see those cues coming in from Gift Nifty, as also from overseas, where the mood is also quiet and circumspect. Essentially, what's happening on the Nifty is that only one kind of trade is working, which is intraday, when the Nifty dips towards a specific support level. It could be the daily pivot, it could be the support 1 or even support 2, as was the case 2 days ago, and yesterday of course it dipped to a support of about 23,465. So only one kind of trade is working. Nifty opens gap up, even that is not going to happen today ahead of the weekend. Therefore, I think we'll just remain quiet on the Nifty. I've mentioned a lot of support and resistance levels which will be coming on the screen. No point giving you numbers as of now, but the underlying tenor of the Nifty is of strength with consolidation. Therefore, we'll see strong moves coming in private sector banks, which have been abuzz over the last 2 or 3 trading sessions. Day before yesterday, it was the turn of large private sector banks, in particular HDFC, ICICI, Axis, and of course Kotak. Yesterday was the turn of smaller private sector banks such as Federal, Bandhan, City Union Bank. In my estimate, today you will see a very sharp rally coming into RBL Bank. But be that as it may, that's how the banking and Nifty is structured. But stock specific news is absolutely driving the market. Lots and lots of news that is coming in as far as individual stocks are concerned. We'll keep an eye out on sugar, on paper, on agri ancillary stocks as the monsoon progresses across the nation, as we get closer to the national budget, which is expected somewhere in mid or late July, and as traders and investors look at undervalued, under-owned, underappreciated and stocks which haven't participated in this record rally so far. So sugar, paper, agri ancillary stocks will be in the spotlight today, as also old private sector banks. Remember Federal, remember CSB, remember Tamil Nadu Mercantile Bank, remember Karnataka Bank. These are the ones that will be in focus today, as also one very important theme, which is the underpinning of this rally, which is coming from underappreciated large private sector banks. So keep those themes in mind. And Sakshi, this is a shout out to one stock that has created generations of journalists, and I would just like to request the PCR to fire the quarterly chart of Infosys. Each line that you see on this particular chart represents 3 months. Infosys today, Sakshi, celebrates 25 years of getting listed on the Nasdaq. This has been India's software bellwether. This has been a company that has created unbelievable amount of wealth for not only its shareholders but for its employees, and it celebrates 2 decades and another half a decade for its ADR listing. The entire management team of Infosys will be ringing the Nasdaq bell tonight at New York, and I'm sure Sakshi will be talking about this on the coming Monday when we'll be meeting often. So keep Infosys in mind. This is a company that has created a generation of wealthy shareholders and immensely wealthy employees. This was one of the most equitable distribution of wealth. Sakshi, I can't even remember the number of bonuses and splits that Infosys has given. There were times when each year the stock would double and would double again for the next 1 or 2 years. So immense wealth has been created, and here is a shout out to the original team of Infosys. Thank you so much. Also, I'll be watching out for Adani Ports. This is a company that enters the Sensex today, displaces Wipro. The last 30 minutes will be a lot of, how should I say, positioning that will take place into Adani Ports, so keep that in mind, and also a lot of other stocks in the market. I believe that fertilizer will be keeping quiet today. Sakshi, what's on your plate? What is the message from Dow and Nasdaq? I believe both of them moved in opposite directions.
Yes, absolutely. Cues from the US markets were mixed. The S&P 500 and the Nasdaq retreated from record high levels. They ended 0.3% and 0.8% respectively lower, while the Dow Jones finished with a strong 0.8% gain as well. Now, the US 10-year bond yield edged higher to 4.2%. Among commodities, when we look at gold futures, did rise a bit to $23.75 an ounce, while the Brent crude oil levels hovered around $85 a barrel, just slightly muted from the earlier level as well. Now, as far as the markets in Asia Pacific region are concerned, they have traded on a listed or listless note in the early morning trading session. So Japan's Nikkei and the Australian benchmark indices were more or less unmoved. You can actually see the Nikkei just about 0.1% high in trade. It is the Kospi that slipped about 0.9% in trade. Hang Seng down by over 1%. Shanghai absolutely flat with a negative bias as well. Following this, we've actually seen that the GIFT Nifty futures are quoting at around 23,590 odd levels, indicating a flattish start for the Nifty for today. Now, as far as the flows are concerned, the overseas investors, they've continued their buying streak for the 4th straight trading session. FPIs mopped up stocks worth about 415 odd crore rupees, while the domestic institutional investors turned net sellers after 3 days of buying, and they sold equities worth about 325.8 odd crore rupees in yesterday's trading session. I'm keeping an eye out on some of the stocks that we'll look at today. So JM Financials first. SEBI has said that the company will continue to face restrictions on acting as the lead manager for public debt issues until March 31st of 2025. This could pressure the stock at least for the interim. and there could be a knee-jerk reaction to this news. Triveni Engineering and Industries is going to be in focus. The company has acquired additional 36.3% stake in Sir Shadi Lal Enterprises for about 44.8 odd crores. Amara Raja Energy and Mobility is going to be in focus. The company has invested 20 million euros to raise a stake in Norway-based Innobat for to about 9.32%. We'll look at how the stock reacts to that news. Yes Bank, the lender, on June 20th announced that its board will meet in June to consider fundraising via the debt securities as well. So we are going to be keeping an eye out on this one too. Aster DM is another one that we are looking at. Olympus Capital Asia Investment is likely to now sell about 10.1% equity in Aster DM. That's today. The block could have a base size of about 5.05% with an upsize option of 10.1%. Floor price has been set at 331 rupees per share. Remember, yesterday's close was 356. So this is at a discount to the last traded price. Union Bank of India. Yeah, S&P Global has revised the outlook to positive on the company and has affirmed the BBB negative rating on the stock right now. On ONGC, the board has approved the appointment of Devendra Kumar as the CFO of the company with immediate effect. GIC Housing, there's a malware attack that has affected some of the end user systems of the company, although the firm immediately isolated the affected systems from the network to stop its further impact as well. Jindal Stainless is going to be in focus. The company supplies stainless steel to produce about 100 made in India freight wagons for Mozambique, and therefore the stock could be in focus again today. So these are some of the stocks that I'm keeping an eye out on, Shail.
So ladies and gentlemen, what is going to be a very interesting day is largely stock specific. Remember, Sakshi and I were just talking yesterday that we did not refer to defense counters even a single time in Thursday's trade. Let's hope they come back with a bang today. And of course, Sakshi, there is a very nice move happening in old private sector banks. Why I repeat this incessantly is that this was a sector that actually went into oblivion. Many people will not even remember the charts of Karnataka Bank. Many people will have forgotten Catholic Syrian Bank. Apart from Federal Bank, which is hitting successive record highs and is a part of the FNO space, the smaller private sector old world banks have disappeared from our radar, and they are going to make a comeback. So we'll be paying attention to RBL Bank today. We'll be paying attention to Bandhan Bank, which moved yesterday. Of course, Bandhan is not an old private sector bank. This is a new one. And similarly, the likes of City Union Bank, the likes of Sakshi, when was the last time we checked the price of Development Credit Bank, DCP Limited? They are all part of our flourishing banking sector. Very nice net interest margins, a very sharp dip in net NPAs and gross NPAs over the last 18 to 24 months. We discuss them maybe once a while when they declare their earnings, and we forget all about them. But they are going to make a comeback, and they are going to make a comeback how? So last 2 days, some of them have appreciated 10-12%. But remember, they are way off from their all-time highs, and of course are still somewhere near their 52-week lows. So keep this thing in mind. When you look at the Nifty Bank, which is at a record high, it's gathered something like 3.5-4% in the past 4 trading sessions. Remember, this was a truncated week. Monday was a holiday. Next week, we not only work for 5 days, but we work more during the day. So this is a sector, Sakshi, which is going to catch our attention, and it is really going to burst upon us. I think we'll be joined by Mayuresh Joshi, Head of Equity Research at William O'Neill India shortly. And of course, on the technical panel, we'll have Mr. Ratnesh Goyal, Arihant Capital Markets. He's the Senior Technical Analyst there. We'll be asking them a whole host of data as to how banks are likely to perform in today's trade. Sakshi.
Right, and apart from banks, we'll also look at how IT stocks really react today, Shell, and that is because Accenture has now lowered the revenue forecast for FY24, and this is due to economic uncertainty, leading clients to reduce spending on consulting services as well, and this could set the tone for the Indian IT companies as well, which are listed on the Indian exchanges. Remember, the company has reported revenues and margins slightly below the estimates, and although the margin outlook is unchanged, but the full year revenue guidance has been narrowed as well. So that could be a key watch for the entire IT space in trade today as to how do they react to this, and does it augur a similar trend that could be in the offing in just about 10 to 15 days, or when we will again start to see how the IT companies in India perform in this current quarter too. So we'll look at the IT names. Apart from this, brokerage houses, I'm keeping keeping an eye out on Morgan Stanley's report on Suzlon. They have an overweight rating, a target price of 58.5. They do believe that on the plant visit takeaways, the plant to date has produced 12 gigawatts out of 20.7 gigawatts installed asset base, and the plant has the capacity to produce about 2.5 gigawatts of turbines per year. So that could be possible, and that could augur well for the company, and therefore they have given higher targets. Apart from this, we also have a report from Nomura, again on Accenture. They do believe that FY24 estimated revenue growth guidance has tightened, and the order book, however, has been strong due to large projects and Gen AI opportunities. But it is the cautious stance has been kept after the company has narrowed the guidance. Now, apart from this, we are also looking at some more reports that are coming in. Citi on Endurance Technologies. Remember, the stock was in focus about 1 or 2 days back again. Citi has come out with a buy rating and a target price of 3,000. Here, they do believe that the management meet takeaways included that multiple revenue growth drivers going forward from here could be looked at. Growth opportunity in the ABS subsegment is positive, and the company is open to mergers and acquisitions given its 5 billion rupees of net cash on the books. And broader demand momentum in Europe also, however, remains sluggish, but they've given a 3,000 target on Endurance Tech. Currently, it's 26.98 as the price. Bernstein on Zomato has come out with a report, buy rating and a target price of 230. It believes the asset-light model is leading to growth from 9% FY25 to about 35% in FY30 is what they estimate going forward from here. Macquarie on Siemens has come out with a report as well. Here they have a neutral rating but a target price of 7,000. They believe the current valuations capture the medium-term prospects, but valuations discount to ABB India has also narrowed going forward from here. So those are some of the reports that I'm looking at, Shell.
Right, ladies and gentlemen. So we are waiting for the pre-open to be upon us. Remember, it's going to be a largely flat day. We are ahead of the weekend, and of course, we've made a lot of record highs across the board. And we've made a lot of record moves on not only the Nifty, Sakshi, but also the mid-cap 100 index, the small-cap index as far as traders and investors are concerned. There's a blowout on NSE 500, and over the last 9 trading sessions, it's the foreign institutional investors that have turned net buyers each consecutive day over the last 9 trading sessions. That has not only helped boost underlying sentiment in the cash market, where there is a frenzy for quality stocks and there is a mad rush to buy into sectors that have relatively underperformed, the PSUs, the defense pack, the railway pack, the entire public sector owned enterprises, and also the banking sector. So that is a segment that has been underappreciated and under-owned. For the last 4 trading sessions, the FI numbers, actually, if I am not wrong, stands at about 11,000 crore rupees as far as net investments are concerned. And there is a blowout that's happening on listings of such as Exigo. It's more than double. Just last week, this time, we had the CMD and the CFO of Exigo coming on our channel, and it was a travel portal which was just subscribed 98 times the size of its IPO. You see a 1.2 percentage point uptick yesterday, but it opened Sakshi, I think 100% higher, and then again went up by 50%. So it's doubled from its issue price.
Okay, we'll also look at Shell, some other stocks which are on the brokerage houses radar. I've pulled out some more reports, and one is on First Source Solutions. Nomura has a neutral rating and a target price of 200. They believe that the company notes that its senior leadership has both time and performance based stock incentives. Net debt of 6 billion rupees in FY24, largely for the WC requirement, and also M&A would primarily be focused on capacity building and not revenue accretion going forward. On the consumer space, there is an interesting report from Macquarie. Remember, we've been talking about how government could be focusing on welfare schemes in the upcoming budget and the recent MSP hike that has been announced as well. So on that, Macquarie has said that the potential government stimuli has an upside risk to Jubilant Foods, and therefore they've removed the stock from Asia Marquee sell list, and they prefer HUL, Titan going forward from here, and they also believe that crop support price increase is similar to earlier years, and now the focus will be in the budget in July. They also acknowledge the upside risk to same-store sales growth from potential stimuli as well. So that's the different aspect with which they are going forward to the QSR chains as well as the consumer names like HUL and Titan as well. Titan has been actually doing very well over the last few trading sessions, and it's been coming on the top technical guests radar as well of late. And even as we talk about yesterday, the stock was for the week, however, it was lower by about 22.6%, but it's coming back on the technical radar as well. So those are some of the other reports that I really got from the recent reports that have come in as of overnight and early morning today, Shail.
Right. Sakshi, I think we'll also pay attention to two more stocks from the F&O space where stock futures have come out of the ban. It essentially means fresh positions can be taken in the futures market, and they are India Cement and Steel Authority of India Limited. India Cement was absolute and outperformer yesterday. It was up 6% if I'm not wrong. Let me just get this data right. It was up 6.9%. Strong show as far as prices were concerned, up 15 rupees, and this was accompanied by a drop in open interest, which essentially means there was a very decent bout of short covering. The chart is right there in front of you. Keep India Cement in mind. Remember, when the stock comes out of a ban, it essentially means fresh long positions can be taken. If it is in a ban, only the existing long positions or existing positions can be reversed. Also, let's keep in mind Steel Authority of India. It's been one of those lovely stocks that has outperformed in yesterday's trade, 3.2% higher as far as prices are concerned. Let me just present to you the monthly picture for Steel Authority. Remember, we are also in the fag end of the June expiry. On a monthly basis, Steel Authority is down 8.8%. So you just might see a swing on the long side as far as Steel Authority and India Cements is concerned. And the other stocks actually which has also come out of ban is Chambal Fertilizers. But Chambal already rose 19% yesterday, and even before the 19% rally, it was up 10-12% over the last 3 or 4 trading sessions. All in all, these 3 stocks will also be on our radar. India Cements, the highest beta cement counter. Steel Authority, something which is liked by traders because of its high beta and low ticket size, and of course Chambal taking it away, 31% higher week on week as far as price is concerned. Needless to say, this is a record high. Sakshi.
Absolutely, we'll be waiting by for Mayuresh Joshi to now join in, and we will be asking him a whole host of questions with regards to the entire fertilizer and the chemicals pack. Was it just momentary, or does it really offer a long-term, option for investors to really look at this space and adding them to their long-term portfolios? But these stocks on an intraday surprised all the investors. 30% rally for jumble fertilizers in 1 week, and most of these stocks were hovering 18-20% higher as of yesterday. We do have Mayuresh now with us. Warm good morning to you, Mayuresh. Thank you so much for taking the time out. Your sense of how are you looking at the markets now, and where exactly are you looking at opportunities? Is it the fertilizer, the chemicals, or the agri-related names that are being taken in by investors with both hands right now, or is there anything else on your radar?
Morning, Sakshi. Morning, Sakshi. Morning, Shail sir. So the first disclaimer is I've taken the beard off, but the market is still in a bull phase. So I think that optimism should continue for the market.
I can see that you are making both
Give it a
parties
week.
happy with this move, Mayuresh. We do not know who the other party is, but for sure, Shail, you have ensured that there is some part of it still left and he is not mad at you.
Absolutely.
So, ladies and gentlemen, this is one totka that we have on air. I had requested Mayuresh to keep his goatee on for the duration of the last 2 odd months, because the bull market was running solely on his beard, and now that he's taken out, he's tempted the gods. Now, let us see what happens next week. Mayuresh, I must say that you are very, very brave in doing such things, because not only the entire viewer fraternity, but millions of people have their wealth now linked to the Nifty and the Sensex, and you really are very brave to sort of try to jeopardize that. But nevertheless, this is a good joke, and I'm sure we'll enjoy. Tell us 2 stocks that you're looking forward to.
Sure. So I think budget is the next thing that the markets will look forward for, and our take is that the budget announcements should not have any negative surprises. Having said that, the kind of capital spend that one expects from the budget and the allocation towards growth-oriented projects will continue. Albeit, if there are no negative surprises, markets will focus back on earnings, and therefore market should probably be in fine fettle in that sense. Having said that, I think a couple of stocks that we are liking at Markets with India. One is Pennar Industries. So the stock, obviously, I think the kind of order book that the stock probably carries at this juncture, the Indian domestic order book is close to 750 odd crores. We're probably looking at the overseas order at around 50 odd billion. But they have not even scratched the surface as far as the entire pre-engineered building infrastructure is concerned. There is a huge market out there as far as the US market is concerned, and they're going to make the best use in terms of facilities in India, as well as optimizing the kind of production costs that exist in the US market as well. Margins have shown a good improvement. FY24 was a brilliant year as far as revenues and bottom line were concerned. And the management probably sounds very, very optimistic in terms of future earnings growth as well. So I think there is a huge prospect in terms of earnings delivery that can come through. EPS, RS rating, institution holding, as per CanSlim, look very, very strong. So this is one stock, if on any pullback, can be looked at by investors. The other stock is Morpen Laboratories. And why we like the story is on 2 counts. One, I think in terms of their core API business, is expected to grow at a very decent pace over the next few years. The 6 products that they've probably got market leadership in most of them, they're expected to introduce many more in the next few quarters as well. The medical devices business, specifically, I think the glucose meter monitor and the BP monitor, I think they've got a market share there. And the management is very, very sanguine in terms of good numbers coming through from both these products, specifically the glucose monitor, because that is where I think the maximum growth is coming in terms of the medical devices segment. From a balance sheet construct perspective, it is extremely well placed, not too much of leverage on the balance sheet as well. And with expectations of more products being introduced, top line growth, medical devices growth, and expectations in terms of more markets being added and more products being added in the next few quarters should augur well from an earnings perspective. So I think we like Moment Labs, Shelser, and Pennar Industries and Market.
Right. I've added those to my list of deep value stocks, Mayuresh, before the moment you uttered those names. So I will now be tracking them. And Sakshi has a surprise for you. I believe there is a brokerage report on Bikaji Foods as well. We'll discuss this a bit later. But let's look at the pre-open. A mild uptick, flat opening on Nifty ahead of the weekend, 29 points higher. But taking it away, Sakshi, is HDFC Bank, 13 rupees 60 higher, 1682.95. Infosys, 1513, 2 rupees 40 lower, and I am sure Mayuresh will have one or two very, very nice anecdotes to remember in the 25-year journey of Infosys as a ADR listed company from India. I believe this was the first ADR that we got listed, but that's a different story. Reliance, 14 rupees lower, 15 rupees lower at 29.32. Let's also look at the broader markets, NSE 500. Remember, that's where the action is. Sakshi, after a 20% uptick on Map My India yesterday, it's now the top gainer again, 16% higher at 2800. The price target has been hit. Remember, 2800 is what Goldman Sachs started with day before yesterday, and it's right there, 20% yesterday and 16% today. Fact, absolutely no stopping there. This is Fertilizers and Travancore Limited. Very low floating stock, 4% higher. Needless to say, this is a record high, 1142. Food company Bikaji, 3% higher, 742. It's the food day today. Devyani International, 3% higher, 174. Endurance Technologies, another upgrade, 2.8% higher, 2774. Fertilizer pack, clicking it away. Rashtriya Chemicals Fertilizers, 3.4% higher. Mahindra Holidays was a top gainer yesterday. It's again in the green as far as prices are concerned. And of course, you have a strong move coming into GIC Ray, 2.3% higher, 397. HPCL and BPCL, ladies and gentlemen, will have a stock split adjustment, 1:2 on HPCL and 1:1 on BPCL. So please keep these two prices in mind. They have adjusted to the extra supply of stock. It's not a drop in price. Tanla Platforms, 1.5% higher. A very quick look into the FNO space. Coforge, this is IT. Remember, Sakshi pointed out the record low of rupee yesterday versus the dollar, because IT companies make large parts of their revenue in dollars. It's helpful for them. So the first four companies, Sakshi, are in the FNO space gainers from the IT pack. Coforge up 2%, Infosys up 1.6%, Birlasoft up 1.4%, and L&T Mindtree up 3% at 5200. What are you watching?
The entire metals pack, remember, Shail, yesterday they were the entire big movers, and we did see stocks like Hindalco, JSW Steel, Tata Steel, all moving in the up direction. Let's look at some of those stocks as to whether there is a follow-up buying on all of these stocks again. So Hindalco is opening about 0.5% higher, 680. Let's also look at Vedanta. That was the top mover in the metal space yesterday. And Jindal Steel is up by about 1065. We also have Vedanta, that's 0.6% high in trade, 473 currently. Let's also look at Tata Steel, JSW Steel, and also SAIL. Remember, Raghavendra was with us yesterday, and he did say that SAIL and NMDC, he believes, are the best placed stocks at this point in time. Tata Steel opening lower by about 1.3%. SAIL is opening about 0.3%. Let's also look at the realty majors. Remember, yesterday it was Prestige Estates that was about 9% higher in trade. So let's see if there is any follow-up buying on that one too. And some of the other stocks like Sobha Macrotech, these were the top movers. If we are also seeing a follow-up move on all of these stocks again today. So there's some profits being taken off after that 9% up move yesterday, 0.6% lower, 2000 odd levels for Prestige Estates. Let's also look at Suzlon. Remember, yesterday the stock hit a 5% intraday upper circuit. This was on a report that gave a target price of 60. Today again there is a Morgan Stanley report with a 58.5 target, and yes, 1.3% higher. Let's also look at Zomato. Bernstein has a 230 target price, whether that one is also moving. I'll also look at the tech-based stocks, First Source and Endurance Technologies on brokerage houses radar, whether that one is moving. Yes, Zomato is up by 0.5% at 197.90. And we'll also look at stocks like First Source Solutions, 1% higher, and Endurance Technologies also up by about 0.5% in trade. So that's the kind of move that we're getting across the board. No, 2.2% higher now for Endurance Technologies, and it's ticking higher even now. Again, it's let's see what else is moving. Private banks, let's look at HDFC, ICICI, Axis Bank. We'll also look at the second rung banks. Remember yesterday we were looking at stocks like City Union Bank doing very well in trade. So we'll pull up some of those banks also to see whether those are also in the limelight in trade today. Apart from the big heavyweights like HDFC and ICICI, both up, and City Union up by about 0.9%. Let's get Mayuresh into the conversation. Mayuresh, things turning in the positive zone finally for the private banks now. Are you confident of stocks like HDFC Bank, ICICI finally moving the needle now, and is the worst now behind?
It seems to be the case, actually. I think two things happening here. One, I think the deposit growth was one of the biggest laggards for large private sector banks. And therefore, I think they seem to be normalizing at this juncture. And at some point of time in the second half of this calendar year, you will see deposit growth coming back. This will also coincide largely in terms of the expectations of a rate cut coming through, both in the global and the Indian context. So that will give a huge amount of impetus in terms of advances growth, and also normalizations of NIMs and spreads, which have come off in terms of the policy action, which has been status quo for the last few quarters. The third element is from a balance sheet construct perspective, obviously with the kind of RBI norms that have got introduced for personal loans, for unsecured loans, so on and so forth. The provisioning has definitely improved on bank balance sheets. And therefore, the risk-weighted assets, along with provisioning and asset quality pressure, which are expected to remain stable, cost-to-income ratio should trend lower in the coming few quarters from a relatively higher base that we probably saw in the past few quarters as well. So I think BFSI is the backbone for any kind of incremental growth that the country is probably seeking at. And therefore, yes, large private banks like ICICI Bank, like IndusInd Bank, do remain on the watch list of market spending.
Okay, so that's the banking space. And are you too worried with the Accenture report now, Mayuresh, the lowered target for revenues that they have given for FY24? Does this also indicate that the IT space back home is likely to see similar, reactions in the earnings that we are awaiting?
So again, I think I've always been of the opinion that you should wait out for Q1 numbers specifically, because that will give us a very clear picture in terms of the trajectory that a lot of these large cap IT companies are probably looking at. So if you distinguish, Sakshi, between large and mid cap IT is still doing phenomenally better. The order size itself is very, very lucrative for orders not to probably get curtailed. The pricing is not an issue. The margins are looking far more stable. The only issue is valuations and high stage basis that they're trading at. But large cap IT will obviously have their bit of recovery in the second half. Is what I feel. The recovery component is largely dependent on BFSI, retail, manufacturing. There is still some stickiness as far as BFSI is concerned in the North American markets. Retail manufacturing should see some element of stability and recovering numbers in the second half. And therefore, both the regions, North America and Europe, should have stability in numbers coming in from the second half. So my own sense is second half should see steady recovery coming through. Wait out for Q1 numbers. You will see some response for the higher end or the middle end of the range maintained by Accenture. But I think wait out for Q1 numbers to get a landscape in terms of how the economic parameters are probably looking and what the management feel probably is.
Okay, so we have a near 1.5% rise on the IT index. This is the pre-opening settling down, and as I had mentioned, the top four gainers in F&O space were actually mid-cap IT spaces, mid-cap IT stocks. Mayuresh, getting this conversation towards the real estate space, there is a fundraising by Shobha via rights issue. Prestige has informed shareholders they have a board meeting today, and a whole host of real estate counters in the small and the mid cap space are buzzing with gains. Is this a place that you prefer, and are there stocks here which may not have caught a trader and investor frenzy as of now, but you like them?
So Shail sir, I think the developer space has done phenomenally well. So I think you pick any player, DLA, Prestige, Sobha, all have done phenomenally well, not just in terms of price action, but in terms of numbers as well. So FY24 annualized numbers in terms of sales, in terms of the targets that they're probably given, in terms of their pre-sales velocity figures, have all turned out to be positively better. The cycle will continue, and therefore, I think with lower inventory onto their books, expectations of pre-sales velocity still continue to remain strong. And if any, I think any rate cut probably giving more impetus in terms of the real estate cycle, that probably augurs well. My take, Shelter, is that the ancillary stocks is something that one should look at. The real estate developers have done their bit as far as price action is concerned. The ancillary stocks had gone through a periodicity of pain. The input cost inflation had hit their numbers. Obviously, volumes were not as expected in the past few quarters. But as houses are now coming up, both in terms of new houses that are constructed, refurbishments that are taking place, and input costs which have probably now stabilized, expectations of reasonable amount of volume growth along with reasonable amount of margin expansion, which will mean that earnings growth should be relatively better for ancillary stocks. So Greenlam Laminates, Century Ply, Sarah, I think keep a few of these stocks on your radar. I think the next phase of the real estate cycle, the second phase, is where I think the ancillary stocks normally dominate. And my take it is that earnings should start showing some amount of respite for a whole host of these real estate ancillaries. So real estate ancillary is the space that I can.
Okay, got that. And we do have, I think, the reports that Shail was mentioning on Bikaji Foods, and this is a Nuvama report. And already the stock is hovering about 269 odd levels, 2.69% higher at 740 odd levels, and the kind of target price that this company has given is 885 over the next 12 months. And we also had an Anand Rathi report a while back, about 3 days back, that gave a 900 kind of a target as well. And this is definitely a savory sweet snacking sensation. What would you say? Bikaji Foods has been your top favorite, and we've been tracking it since the time you mentioned it on air. And I remember last time I spoke to you about this space, you said my choices are very clear when it comes to namkeens and bhujiyas. So I'm not going to be deviating from my own choices. What about Bikaji Foods now?
No, I think the story continues, actually, very frankly. I think the savory market, the sweets market is growing at a huge pace. The unorganized players are humongous in numbers. So I think organized players are going to gain market share because of all elements in place, the distribution network, the packaging, the pricing, and the Indian appetite in terms of, as I said, of snacking, which probably will not go away for a long, long time. So yeah, I think the optimism on pricing, the kind of valuations that one reads about for Haldiram's as an example, I think all those factors might keep the stock in good trend.
We'll discuss Bhujia and much more in this market open, ladies and gentlemen. The Nifty is 53 points higher. There's a mild downtick on Nifty Bank, nothing to be worried about. It's at 1700 points. Some of it should be taken away. But it's IT and IT all the way. Almost a 2% blowout on the IT index, 35,600 for you, ladies and gentlemen. Remember, a decent kind of a uptick from Accenture in terms of guidance, and of course the record low on the rupee helping this export oriented sector. Let's now dip into prices, and we'll start the conversation with Infosys, 1.7% higher, 25 rupees uptick, 1540. The company celebrates its 25th year as a listed ADR on the Nasdaq today. Okay, what is Reliance doing? 10 rupees lower, 29.38. What is HDFC Bank doing? Resting after a 2-day tear. 3 rupees lower, 1666. Let's look at the winners on the index heavyweights. They are TCS, 2% higher, 3861. We've discussed Infosys. The Bajaj twins are doing pretty well. 13 rupees higher on Bajaj Finserv, 29 rupees higher on Bajaj Finserv. Bajaj Finance. ICICI is in the green. Let's very quickly shift focus to NSE 500 and see where the action is. Okay, Map My India, 8% higher, 2600 rupees. Happiest Minds, this is a very well-known mid-cap IT stock, one of the market darlings earlier, 4.5% higher, 926. There's no stopping fact, 1% higher, 1108. Let's shift focus to IT because that's the story. Okay, persistent, 2.7% higher, 4000. Remember, this was the last trade that we took yesterday in the closing show. L&T Mindtree, 3.4% higher, 5221. Coforge, 2.7 higher, Tech Mahindra, 2.2 higher, HCL Tech 2% higher, TCS, L&T, Infosys, Wipro, all of them buzzing with grains. 700 points higher on the Nifty IT index. Mayuresh, you will have to step in. One very quick pick here, and quickly please.
Yeah, so I think from the large cap names, HCL Tech is something to be kept on your radar. I think solid earnings growth is expected to continue. By solid, I mean at least compared to the large cap peers, they will maintain the revenue stack as far as constant revenue in dollar terms are concerned. Margins should be maintained in the band that they've probably given out. And the expectations in terms of client additions that they probably got should hold them in good stead. So I think HCL Tech from large cap IT is something to be kept on your radar.
Okay, we also have Ratnesh joining in. Let's quickly welcome him on board. Ratnesh, warm welcome. Your top stock picks from the IT space, since that remains the top story in the opening space.
Very good morning everyone, and to all the viewers. Well, if you talk about the IT space and my favorite pick, the IT space, so personally, I always go with the outperforming in the sector and in the stock. So if as of now, definitely, the IT sector was not outperforming, but if any stock you want to pick, I will go with the persistent. So persistent is definitely a very it was outperforming. So around about the 4010 or 4000 something like this. So maybe we can see the target around the 4100, 4150, and the stop loss will come around the 3950. So I will prefer the persistence.
Okay, and you can see the entire space buzzing in action. So be it First Source, Persistent, Time Technoplast is up 9%. Happiest Minds was marked out by Shell and CE Infosystems. There is no stopping this space as well. Emphasis is up by 2%, 2.5% increase for Coforge as well. And across the board, we are seeing the IT space stocks definitely rallying in trade, and 0.5% increase even for the mid cap index. So that's also buzzing in trade. One more deal that has taken place, I'll just quickly mark that. Aster DM, there's a large trade that has taken place, which I was indicating earlier. 4.7 crore shares or 9.3% equity worth 1607 odd crore rupees has exchanged hands at 345 rupees per share. So that has taken place. The stock is down by about 1.3%. But it's again the real estate space, Shell, that's buzzing. Purvankara now up 4.5%. So it's the real estate also that's buzzing in trade, Shell.
Gentlemen, let's pay attention to IT. 9:20 we have the first 5 minutes of trade, and the PCR will fire the Nifty IT index for you. Very, very strong move coming in, and now almost 2.2% higher as far as prices are concerned. Remember, yesterday, day before yesterday, it was the banking index that was a showstopper, and a gap up now on the IT index takes you to 21 March. So it's almost April, May, a 3-month high that we've seen coming on the IT index, and 19 IT stocks that we track for you. All of them are in the green in the FNO. Let's look at the cash market, and this is coming to you, Ratnesh. KPIT Technologies, this is a high beta counter now trading at a 1-month high. The last time you saw this price, it was 28th of May. What are the charts of KPIT Technologies telling you?
KPIT Tech always outperforming this IT indices. It is still outperforming, and we can see that it's not going to below the 200 moving average line on the daily chart. So now once again it is ready to give the breakout. So I believe that once it starts trading above 1610, 1605, so we will see the fresh breakout in this stock, and we can see the target of 1740. So the risk reward ratio is in the favor in the KPIT Tech. So still one will give the SL 1560, but initiate trade above 1610, 1605.
Okay, I'll also mark Coforge for you, ladies and gentlemen. This has reclaimed all its lost ground, now at 5,500 rupees for you. Remember, this is the price ticket is fairly high at 5,500, but it's just broken past its 200-day DMA, and this is showing a very strong traction. The last time you saw this price, it was April 15th. Coming to you, Mayuresh, anything that you like in Coforge, or should we stay away?
I think decent story, because I think it's an entire mix in terms of how travel tourism will also play out, because a large part of their business also comes in from those segments, and therefore I think the expectation largely that is getting built in is that these segments will do well. Obviously, you had seen one very patchy quarter in the previous 2 quarters, but I think there has been a lot of stabilization in numbers which has now come through. So anybody holding should continue.
We'll again look at some of the other stocks that are moving in trade. Amara Raja Energy, which I had mentioned in the stocks to watch list, is opening about sharply 4% higher in trade. GE Power is another one that's opening about 5.5% on that LOI of contract that is we are getting. But clearly the story and more, some of the other stocks also are buzzing, but clearly it's the IT space that hogging all the limelight. First 6 stocks on the Nifty is completely the IT space. LTI, Mindtree, Tech Mahindra, HCL Technologies, Infosys, TCS, Wipro, all of them are up and about. Even in the F&O space, LTI, Mindtree is the top mover, about 4.2% higher in trade. Persistent is the next one, 3.5%. Tech Mahindra is also pulling up in trade, about 3% higher now. L&T Technology Services, HCL Tech. So this clearly remains the story. 2.6% higher now for the Nifty IT index. It's moving at the high point of the day. And viewers, now the Nifty and the Nifty Mid Cap both have also claimed record high levels again in trading session today. We do have a new Nifty mark today of 23,667 is what we touched and came back. So we'll continue to look at that level also to be seen towards the closing of the session. And it's the IT space that's clearly contributing to these gains again. Let's get Ratnesh into the conversation. Ratnesh, what about the Nifty names, something like a Tech Mahindra or a Wipro that was being seen up in the move a few weeks ago? Is it back on the radar?
Particularly if you look at the Tech Mahindra, so Tech Mahindra definitely it was consolidation from the long time. Now definitely it is ready to give the breakout of the consolidation. So I think it could be the great bet for the midterm target. Also, I can sense the target 1550, 1570, and with the stop loss is 180. So risk reward is in the favor for the investor trader both. So I believe the Tech Mahindra after the my persistent pick, Tech Mahindra could be my next pick. So you can just give the persistent is more than 3.5% up. So maybe our viewer earns some money in this quick trade.
Okay, got that. Let's get Mayuresh also in the conversation. Mayuresh, it's going to be a tough choice now. Would you still stick with the mid-cap IT names versus the large-cap IT names now?
$1,000,000 question. I think mid-cap IT is doing phenomenally well even now, and therefore stocks like Persistent, KPIT should continue doing well. And my thesis is very clear. Wait out for Q1 numbers. You've seen the reaction today based on what Accenture did in terms of their guidance outlook. But wait out for Q1 numbers, and in Q1 I will specifically wait out for Infosys and HCL Tech.
It's 9:26, ladies and gentlemen, and Sakshi, I think yesterday it was fertilizer, which is now booking profit. You can see a 4% downtake on Chambal. RCF is also a bit weak, but it's the rail pack which will gather attention in trade today. I have RailTel 4.5% higher, 452. Ircon is 2.2% higher. TexRail is at 209.70, again up. Kernex, Hirect, IRFC all in the green. Mayuresh, this one comes to you. Favorite within the rail space in the PSU segment, and favorite within the railway sector in the private listed space.
So 2 stocks to be kept on the radar, Shail sir. One obviously is Texmaco Rail. We have discussed this I think a few months back. So any pullbacks on this one should become a good opportunity in my opinion, because there has been a strong turnaround as far as numbers are concerned. So if you stack up numbers from 22, 23 and what it did in 24, the turnaround has been very, very evident. The second element obviously is the kind of order book that Texmac or Rail is sitting on and is expected to probably get. I think a large part of budgetary allocation towards railways, railway infrastructure, railway security systems, and wagons as well is going to augur well in terms of Texmaco Rail as well. And therefore, I think Texmaco Rail is one stock that you should probably have on your radar. The other stock probably on some price trend would be Gateway District Parks. Now, it is a unique mix in terms of logistics as well as rail infrastructure. With the expectations of the Western Dedicated Freight Corridor expected to get completed in the next 2 quarters, a large part of the business that probably comes in as far as containers are concerned, as far as their container stations are concerned, both on the west and the eastern coasts of India, and the stake that they've probably got in Snowman Logistics. My take is that the entire railway infrastructure, once it comes through, should augur well in terms of volumes, and a large part of allocation that probably happens towards logistics as a space as well in the budget should be significant enough. Snowman will also contribute significantly better in the next few quarters to come. So I think Texmaco and Gateway District Parks would be on your.
Okay, two stocks that Ratnesh will look at from the PSU pack, Sakshi. This is HUDCO and NBCC. Both of them linked deeply to the government's latest plan to construct 3 crore houses in Modi 3.0. Ratnesh, a choice between HUDCO and NBCC, both of them buzzing with gains.
Definitely, both are outperforming. But if someone want to bet on any one stock, so I will prefer the NBCC, because NBCC was a consolidation from the long time. Now it is ready to give the breakout above the 175 level. So I thought. So I believe that it will be a very good bet. So risk reward ratio is favor. So 160 will be the stop loss, and I believe the target will come around in the midterm, the 195 and 225.
So that's the PSU stocks that's garnering all the limelight. Let's again look at CE Infosystems. It's now up about 10 odd percent. So another day after 20% surge yesterday, another day of double digit gains now coming in. CE Infosystems or Map My India is very, very strong move, 10.8% higher now, 11% now, 2673, and 2800 was the target given by the brokerage house, and it's just about 150 points away, 150 rupees away from that level of 2800 that the brokerage house had mentioned, I think Goldman Sachs yesterday. Mayuresh, to you on CE Infosystems, what kind of opportunities lie in front of viewers who've been feeling FOMO for the last 2 days on this one?
You have to wait it out. I think the market is the best teacher in terms of patience. So if you don't have that element or bit, I think markets is not the right place for you. It has moved in terms of enthusiasm that has got exhibited, but you need to wait for pullbacks to probably come from this one.
Okay, got that. So that is CE Infosystems for you. Apart from the IT space, within the mid and the small cap space also there is a lot of action that's taking place. Zensar Technologies is another one that's moving up 6.5%. Happiest Minds we already marked. Raymond is moving about 5.6% higher in trade as well. Let's get Ratnesh to tell us on Raymond's if he sees any kind of chart instructions that he can give all the traders. The stock is back in action. Anything going forward from here that one should look at?
It is very good stock and going. It is outperforming from the very long time. So I believe that after some little correction, still now again once again there is a chance to buy this stock for the trader and the investor for the both. So I believe that keep the stop loss around the 2480, and I can see the target. First target could be the 2660, then 2700.
Okay, got that. Going forward, so Raymond's is something, and in fact the entire textiles and apparel space seems to be in the thick of action as well. Even yesterday I had pointed out some of the textile stocks that were moving, and again today some of the other stocks like VIP Clothing, Arvind Fashions, very strong move can be seen. Sai Silks is up and about in trade as well. Some other stocks like Zenith Exports is up in trade. You have Donia Industries. These are the stocks that have been gaining in traction. Mayuresh, anything within the textile space that you prefer? Is this a space that we should watch out?
I think the expectation largely is that at some point of time the FTAs will get signed up, and as that happens, I think the kind of enthusiasm in terms of volume growth should start coming through. The PLI for textile should also work in, and therefore integrated players should be on your radar, because I think the entire ecosystem, right from procurement, yarn to processing, the ultimate fabric, is something to be probably watched out for. So I think Vardhaman Textiles, KPR Mills to be kept on your radar.
Sakshi, we'll focus on Steel Authority of India. Remember, I mentioned it in my early morning commentary that this is something which has moved out of the FNO ban. Ratnesh, coming to you, a very, very strong show as far as the volume is concerned, at least on stock futures. What is the Steel Authority chart telling you?
Was the consolidation, but now from the last 2 days, now it seems that we are going to see the participation from the metal sector. So I believe that the sale could be the good bet because it was the consolidation from long time. Maybe in the next 2 days we can see the good breakout in this sale. So I will keep this stop loss around the 153, and the first target could come around the 163, 165 there.
What is interesting, Mayuresh, that in Steel Authority, already 40% of 5-day average volume has been traded. 1 crore 17 lakh shares, and the counter is above its 21-day EMA today. So out of FNO ban, and of course this is a low ticket high beta item. Within the metal space, would you have a preference between public sector and private sector metal producers? Anything that you like at current levels?
On the steel pack, I think JSW Steel is something, in our opinion, that can still continue doing well. You have to keep that on your watch list. Volume growth should be reasonable enough. They are doing reasonable amount of capex in the next, and they've actually spread it out in the next few quarters and years as well, which means there is no excessive pressure that comes from a leverage perspective on the balance sheet as well. Value-added products are going up. The integrated components in terms of input costs are going higher as well, and therefore JSW Steel is one stock in the private space that you should probably keep. SAIL also is doing a commendable job. I think numbers have been relatively better. HRC, CRC prices have remained extremely stable at this juncture. And therefore, I think the kind of numbers that one expects should be reasonably stable, topping that up with a reasonable amount of dividend yield as well. So, yeah, JSW Steel, SAIL, if anybody is holding, can continue.
Okay, we began marking with the 2 or 3 IT stocks. Remember, KPIT, well, days high, it's buzzing now in 1606 rupees. Remember Coforge, it's now gathering steam above 5516. Coforge, ladies and gentlemen, is above 200 EMA, therefore you have to keep it in mind. Now up 3.2% in as far as futures are concerned. Let me see the open interest placement on Coforge. Okay, this is short covering that's happening on Coforge. At the moment, the open interest is slipping. So this is good news for long shareholders. And of course, if KPIT is moving, there is no stopping Birlasoft. This one is coming to you, Ratnesh. What is Birlasoft telling you as far as charts are concerned? I see a price of 700 rupees 45, and a very large block deal of 5.6 crores has just happened. Before that it was 4.76 crores. Your view on Birlasoft?
Birlasoft, I believe that Birlasoft will take a little bit time from here, but definitely it is taking the good support on the 200 moving line on the daily chart. So I believe that definitely after some consolidation we can see a good run up once again, because we have seen the correction in the stock from the level of around the 850 and then now trading around the 600 700 level, something around that. So keep the stop loss around the 670. I believe that it will take a little bit 1 or 2 days. Then after that we can see some breakout in this stock and can see the target around the 740.
Got that. Let's focus on some stocks that are moving sharply. I wanted to ask you, Ratnesh, on Info Edge. Strong move, 3.2% higher on this one. How are you looking at the move right now that's built up, and will this carry on? Should one take a dip here on Info Edge? It's now up about 3.2% higher at 64.79.
No, it is ready to give the fresh breakout. So I think if someone missed this, still there is a chance to take the entry in this stock. So keep the stop loss. I'm giving a little bit deeper stop loss, so because it is a very volatile stock. So keep the stop loss around the 6400 or 6390 level. I believe that once in the 6530 is the very immediate target, and after that we can see the that a very big target in this stock around the 6800.
Okay. Let's also get Mayuresh into the conversation when it comes to Bharti Airtel. That one is also moving up strongly now, about 1409, 2% higher in trade today. Remember, its 52-week high is 1455, so it's inching closer to that now. Upcoming meeting of Spectrum auctions also likely to be a big trigger for this one and the entire telecom space, Mayuresh. And we did see how Indus Towers has moved with Vodafone Group's stake sale now happening. How are you really looking at the entire telecom space, and within that stocks like Bharti Airtel, Indus Towers, Vodafone?
Bharti is very strongly positioned, Sakshi, and I think the biggest trigger for them is going to be the announcement of tariff hikes. At what point it happens is anybody's guess. But as those tariff hikes starts coming through, a large part of their capex has been front-loaded, specifically on the 5G ecosystem, both in terms of devices as well as the infrastructure requirements. And therefore, any component of tariff increase as it happens is directly and incrementally going to add positively onto the EBITDA and the bottom line as well. The African operations are holding up as well, and any positive news in terms of divestments of a few regions out there will deleverage their balance sheet even more. So I think the stock has moved a lot in anticipation of this news. But as this starts trickling in, as numbers become better, if this starts happening over the next few quarters, I think that will reflect positively in terms of the EPS growth. So anybody holding on to Airtel should continue.
Okay, ladies and gentlemen, so actually it's a crisis of plenty today. Very, very difficult to keep on top of momentum. I think railways have taken a rocket. And what was happening in defense in the early part of the week, it's now with railways. Anything that has an R after an I, which is Indian and then railway, is clicking with merry gains. Railtel, top performer, 7% higher. Ircon, 4.5% higher. Mayuresh's favorite, TexRail, 4.2% higher, 214. Rights, 2.3. IRFC, 2.6% higher, and RVNL, 2.2% higher. How can I forget IRCTC, 2.3% higher, 1,039. There is absolutely no stopping KPI Tech, 1623, very strong gains coming in here. And of course, one stock that I wanted to discuss with Mayuresh is Vodafone Idea, and it's how should I say, not exactly another telecom company, Indus Towers. Both of them are inextricably linked, and Indus had a very major news flow coming in day before yesterday. Mayuresh, first to you, the improving corporate balance sheet of Vodafone Idea should give good comfort to long-term shareholders. As an unbiased researcher, what is your view on Vodafone Idea? And then perhaps we'll again discuss Indus Towers.
So, Shelsa, let me balance this out. I think what has transpired in the last few weeks since the rights issue that they had, the allocation towards institutional investors, so on and so forth, and the expectation again for the telecom landscape as a whole. So, if tariff hikes happen, all players are going to take it, and that will positively reflect onto their balance sheet. So, whether it's Bharti or Jio or Vodafone Idea, the three biggest players in the Indian ecosystem. The second element is to protect your revenue market share and your subscriber market share. Obviously, in the last few quarters, because they had a legacy system of 2G, Vodafone Idea, certain circles had to be given up, and they were facing stiff competition in other circles where they were predominantly present, which created a huge migration towards Bharti and Jio. and they were weeding off their low cost subscribers as well. But now, since stability has come back into operations, I think those market share gains will remain stable in the circles that they operate out of. The third element, obviously, is the excessive leverage onto their balance sheet, and therefore the stake sale in Industars reduces the leverage component a tad bit. What we also need to understand is they will also need some accelerated capex towards the 5G ecosystem to compete with threats like a Bharti and a Jio, and therefore the balance sheet capex is going to continue over the next few quarters. The fourth element obviously is going to be with tariff increases, it does relieve or create some element of relief as far as balance sheet is concerned. But overall numbers, as far as the leverage component is concerned, still will remain relatively high. So yeah, I think if you are a trader, a high risk trader, a high risk investor as well, I think Vodafone Idea will be for you. If you're a conservative investor, a conservative trader, this is not the stock.
Okay, fair point. And this huge block deal that we saw on Industars day before yesterday, Vodafone PLC selling 18% stake, all our old friends from the mutual fund industry converging on Industars. How do you see that transaction?
Positively, because what you've seen, Shail sir, again in the past, right? You've seen American Tar Company; they have been on a spree in the last few years, and therefore I think tar assets or infrastructure assets related to telecom are going to be extremely critical in terms of the consumption patterns that are probably expected to happen. We've not even scratched the surface, very frankly, at this juncture. So data consumption is going to go up quite significantly and exponentially in the next few quarters and years. And therefore, more towers will be the need of the hour, and therefore, valuation per tower is going to increase. From an absolute tenancy ratio perspective, with Vodafone surviving, Indus's balance sheet dynamics improve. Obviously, the debt has gone up over the last few quarters, but that should relatively now stabilize as far as the overall construct is concerned, as far as earnings and overall bottom line growth is concerned. So, yeah, anybody holding to Indus can.
Okay, got that. Let's again revisit Raymond. I had discussed this when it was about 6% higher. Now it's 10% higher in trade, 10.5%. We were discussing with Ratnesh, and he was saying that the stock is ready. Yes, 11% now, 26.80 for Raymond. Ratnesh, what's next? And I'll take fundamental view from Mayuresh also on this one this time.
Raymond is, as you mentioned, that definitely we are going to see the bigger target now. I think our first target hit. So I believe that still, if someone buy after listen our discussion, so keep the just trail the stop loss and trailing stop loss will come around the 2630 and just wait for the update target around the 2730 or 2750.
2750 as the technical target. Okay, Mayuresh, yours on Raymond. What do you foresee for the company and the stock going forward? Is this still an opportunity for investors to dip in?
Their branded business is doing well. I think the Suits business is doing well. The other FMCG business, because of the divestments that you've probably seen, the balance sheet is now cash rich. So I think a lot of positives onto the stock from a corporate perspective. What happens outside the corporate world is something else. But yeah, from a corporate perspective, I think it looks reasonable.
Okay, got that. We'll also look at some other stocks that are buzzing in trade. Within the small cap space, again, there is a lot of action. Ircon International, of course, the railway space, as was being marked by Shell, is on the move, and it's 4.5% higher. You have Affle India, that's up 4%. CAMS is coming back 3% higher. Sonata Software, India Mart Intermesh is in focus, 2.6% higher. Nippon Life, India Asset Management, RITES, Titagarh Rail. So a large part of it is, of course, the railway space. Even Honasa Consumer is 2% high in trade today. Data Patterns is up by 2%. Within the metals pack, again, it's Nalco that's moving up as well. So a whole host of move within this space going in, and even the oil and gas space, I think, is doing well now. Oil India up 1%, ONGC up 0.5% as well. So this space is also buzzing along with power space, Power Grid, NHPC. You have Power Finance Corporation, REC, all of it moving in tandem again. Let's discuss the power space again. Of course, this has been in the thickest of action of late, but light low for a bit and it's back in the move. Ratnesh, anything within the power space that looks positive to you on charts?
As of now, all the power stocks are, in the consolidation mode. So, but definitely there is some level that if it break that level, we can take initiative. So, my weight will be on the PFC, but not at the present level. Just to let it I believe just cross the 495 level, then we can take the initiate trade in this PFC for the target 505, and then keep the stop loss 489, but only above the 495.
Ladies and gentlemen, we'll show you an erstwhile market favorite. This is the Happiest Minds, a company that was set up by Mr. Ashok Soota. He was the founding father of Wipro Technologies. I'm talking about 1980s, and has to his credit many listed victories, among them Mindtree, which was taken over by L&T some time ago, and of course now Happiest Minds. He's with the stock, I think, is at a fresh 52-week high. Let me check. Coming to you, Ratnesh, what are the charts of Mindtree telling you? This was one of the market darlings in 2021. I think it got listed at a 100% premium somewhere in the COVID time. I'll get you the stock price for that one, the listing price. But what are the charts of Happiest Minds telling you now, Ratnesh?
The Happiest Mind was from the very long time it was underperforming, in the IT spaces. But now it seems that there is some bottom formation going on, and the falling wedge pattern breakout you can see very soon. So I believe that once we get the close above the 965 closing, I am talking about here the closing. So once we get the close above the 965, so we can see the target 1080 or 111. So and that time the stop loss will come around the 920. So just keep on the radar and just wait for just watch the closing above the 965.
Okay. Mayuresh, would you have a view on Happiest Minds? Is it something that you are tracking at William O'Neill?
No, not really right now, Shail. Not right now.
Okay. Now, let me just go back in the history of Happiest Minds. Actually, it got listed at 351 rupees. This was in September of 2020. If memory serves me right, it was a 100% uptick as far as the pre-IPO prices were concerned. And from that listing level, from 350 rupees, it went all the way up to 1566. So it went 5x in a span of 1 year. And from then on, it's been a very long bout of consolidation. It bottomed out at 727, 747, and you see this blowout happening today. And let me just bring a background note on this one. The chairman, Mr. Ashok Soota, has just told Business Standard that FY25, which is the current financial year, will be the best year for Happiest Minds since IPO. So with that background in mind, ladies and gentlemen, keep Happiest Minds on your radar. It's an unlocking of a spring that has happened after 3.5 years. Sakshi.
So we'll continue to keep that on the radar. The pharma space, there is some action coming back on this one. The Nifty Pharma Index is up by 0.8%. Granules, Mankind Pharma, Dr. Reddy's, Abbott, Glenmark Pharma, Torrent Pharma. These are the stocks that are buzzing, upwards of 1% kind of gains coming in across the board. On the Nifty movers, you have Apollo and Sun Pharma. Divi's also that's moving up in trade right here. What is your own view, Mayuresh, on the entire pharma space? How are you looking at the space and where are you keeping your focus, if at all?
Holding on to stocks like a Cipla, Reddy, Sun Pharma in our global portfolios, our belief is that the specialized segment for most of these players should do well. They've created a good pipeline as far as FTFs are concerned, and therefore, as launches start happening from phase 2 to phase 3 and the actual launch in the next few quarters, that augurs well in terms of both revenue visibility as well as margins. So these are the large cap names that we continue liking. From the mid cap space, I discussed the stock pick that I just had in the morning show. Morphin Laboratories. Our belief is that earnings growth should continue, remaining extremely strong for both the medical devices part and the API part for Morphin.
Okay. Ratnesh, to you, anything on the pharma space that is ticking on the charts as well that you'd like investors to keep an eye out on?
In a particular pharma, if you see that we are seeing the consolidation from the very long time in the sector or indices. So as of now, definitely the not we will not see a very sharp uptick in the indices or the stock, but I will prefer the Dr. Reddy because it was outperforming, and after the correction, it has taken a good support on the daily chart. So I believe that now Dr. Reddy is ready to lead in the pharma sector. So keep the stop loss in the 5950 level, and we can see the target around the first target would come around the 6200, and then after that 6300.
Okay, ladies and gentlemen, we are at 9:53, and even not even for a second have we mentioned the Nifty and the Nifty Bank. Such is the enthusiasm in the broader markets for cash counters that it's just that momentum has just taken us over. Okay, the end of this week, Friday, after half an hour, 37 minutes of trade, we have a 25-point uptick on Nifty, flat as flat can be, ahead of the weekend. 23,594 for you. The battle for supremacy between bulls and bears is at 23,600. Nifty Bank, after a stunning rally on Wednesday, which was its weekly expiry, it added 957 points, and yesterday's 400-point uptick, the index is now sort of pausing. 222 points lower at 51,560. Nothing to be worried about. This is consolidating at record highs. The star of the day, ladies and gentlemen, is the IT index, 700 points higher, a 2 percentage point uptick at 35,631. This is a 3-month high for the IT index, and what a day it has been. It's the 25th year of Infosys' listing, and I'd just like to get Mayuresh into the conversation. 25 years ago, Mayuresh, I was a young reporter. I'm just a reporter now. I think you were in school. Any recollections that you might have of Infosys when you started investing, when you started researching?
So I was in college, so I'll just correct that. So yeah, I think the memories are quite vivid because you had those pink papers at that point of time. The Economic Time used to come in pink papers, and we used to read to show off in college that we know so much about economics and so on and so forth. But I think the stock was not subscribed for. There were very few subscribers in the initial leg of the IPO. Very few people had conviction in terms of what an IT company will probably do. And see what it has done in the last 24 years. A staggering amount of return that the stock has compounded with, purely based in terms of the brilliance that the core team probably just put together and created this wonderful IT services company, and which has created a name for the IT sector across the globe. So still vivid memories in terms of Infosys listing.
Okay, and I've just shared with Sakshi the long-term chart of Infosys, which lists out the stock splits and bonuses that have happened over the last 25 years. I was just trying to hope that we can show it to our audience, but 5 plus 3, 8. In a span of 25 years, ladies and gentlemen, the company has declared 8 stock splits or bonuses, and you will not believe how generous this company was when it came to rewarding shareholders, and even today it's one of the top gainers. So hats off to one of the earliest value creators of equitable wealth distribution in India, which is the top management of Infosys, and also for it being the poster boy of India's IT revolution. Sakshi, there was a time when software exports were free. There were no taxation on software, and this was the time when supernormal wealth was created for all sorts of people. So while TCS is the elder brother of Infosys, both in terms of size and in terms of beginning this IT revolution, but it was Infosys that sort of gathered the minds of aspiring Indians towards IT, because for a very, very long time, at least till 2004, TCS was not listed. So the entire rally that we saw between 1996 to 2004 in the IT space was encapsulated by Infosys. What a glorious, glorious day. I have some of the greatest memories of going to Bangalore and covering the quarterly earnings of Infosys early morning at 7 a.m. and those were great, great days. Bangalore was not as crowded as it is now. Mayuresh.
Absolutely, Shail sir. I think it's I mean, my head office is based out of Bangalore, but I think it's a pain, and that's what a lot of my colleagues tell me. But yeah, I think those initial press conferences, Shail sir, that you were just mentioning, and the kind of vision that Narayan Murthy and the co-founders had, staggering. And let's not forget the returns. Anybody who just patiently invested and waited out, I know it's a difficult time to hold on for 24 years in terms of volatility, but just the staggering returns that this stock has probably delivered to shareholders, and the concepts that it made clear, rewarding shareholders, giving a large part of the money back to shareholders, itself was a defining moment for Indian stock markets.
Right. Well, okay. On that note, we've come to the end of our morning edition. Thank you so much, Mayuresh and Ratnesh, for being with us on this show. And of course, a fantastic day. We will continue to refer to Infosys throughout the trading session and marking its glory through the day as well. And of course, it's International Yoga Day. So, health tip from Mayuresh before we go.
So not much of a yoga person, but I do hit the gym. So I think everybody should do some sort of an activity in the day. It reduces stress and it reduces a lot of the mental bandwidth that has been taken away from you, and it creates a lot of positive energies. So yeah, hit something in the day. Work out, play a sport, or do something.
You know, Sakshi, for a person who wears Bikaji Foods on his sleeve, probably Mayuresh might not be the right person to ask about yoga. But nevertheless, your point is well taken, sir.
Yes. No, I don't consume Bikaji in huge quantities. A little bit here and there.
Okay, next time we are with Mayuresh
stock
also, I
of,
think we should
Bikaji
do,
is, far
we should
more
do all the
healthier alternative.
dishes made out of bhujia with him. We have to do that. I think it's going to be a different chart pe charcha, because it's going to be all made of bhujia and the various ways with which you can consume bhujia and all the recipes right there. That is something that will be very interesting with you, Mayuresh.
Sure, we'll do that.
Okay, wonderful. Well, thank you so much, Ratnesh and Mayuresh, and thanks, Shail. We'll wind up at that 23,618, holding up still as of now. As far as the Nifty is concerned, we'll continue to track the markets throughout the day for you. So stay tuned on Business Today. A lot of action coming up on your screens, and don't miss daily calls at 12 noon, which answers all your stock queries.
Devan bhai, I wanted to take your